What's going on, everybody? Jeff here. Welcome back to the channel. All right, guys, this video is going to be a bit of a lesson video. On Tuesday, I had stated in the video I made that night that on Wednesday, expect a big move, whether it's to the upside or the downside. We had volume slowing. Investors were waiting patiently just to see what came out on that FOMC statement. And then obviously after Jerome Powell was speaking, he said a couple of things that I think were bullish in the short term. The fact that 75 basis points hike is for now completely off the table. That was probably the biggest thing, and the market rallied right from there. We did get a big move to the upside. Okay, I think it was short-lived for a couple reasons. The biggest one actually being that investors now feel, because of his sentiment, that his sentiment stating, okay, that the 75 basis point hike was completely off the table. At least that's how he portrayed it. Made some investors feel that, if inflation does, run rampant, that he's not going to do whatever it takes to really get it, under control. So I think we did fall into that. But on Wednesday's video, I had stated it was actually titled, is this the bottom? I had some people comment saying, oh, well, now as we can see, we're sitting at, 412. Clearly it wasn't, on the bottom, although we did hit, 405 even earlier. But I had stated in that video that 430 level of resistance was very, very strong. And if we didn't break through that we were going to move more to the downside. I also stated in that video that for some reason that 380 to 390 number on the SPY really just sticks out to me, to where we get those bulls to really, really step in. The pumps that we've got, these bounces that we've seen as of lately, there's not much volume behind them. Okay, and it's just something you can literally see by looking at these candles, looking at the charts, or for so many years, and looking at the volume clearly, that the sentiment is very, very short-lived. It's a short the top kind of market. So guys, in this video, I want to break down exactly what goes through my mind. I know a lot of people who are inside the group always want me to take one step further, so I'm going to do that for you. So let's get started right into it. First thing I do want to point out is this chart right here. This is the 10-day 15-minute chart. Probably one of the first ones I will look at when, I open up my computer in the morning, just to see exactly where we're at. There's two things that I do. The first thing is I'm going to draw a line at where's my breakout, okay? Where are we going to break above for the stocks and continue to move to the upside? Clearly, you can see this 429.65 area we've rejected off of, one, two times, even three times. So if we get through that on that pre-market on that Thursday, okay, we're gonna rip to the upside. All right. If we reject off of it, considering the past few days, there's not much activity around this area. Expect a larger move to the downside. So pre-market, I clearly stated on the SPY, if we get above that 431, I wanted to give a little bit more room, in confirmation, especially for everybody inside the group. Look for those 436 calls. If we get below 423, look for the 418 puts. Those printed like crazy. I think they're up 300%. And I'm also going to consider puts that 430 rejection. Reason being is because that is what is known as a supply zone. Now, if you're trading supply and demand, those are reversal trades. It's actually one of my favorite. Reason being is because your risk reward is amazing at that level. Okay, you're basically buying calls at the bottom, buying puts at the top, and if it continues to go higher, you just cut your puts, and your losses are very minimal versus buying puts when it's already going down and then it starts to pop back, and you're wondering, should I cut it? Is it gonna, is this confirming or what's happening? Okay, and that's when you let some of your losses turn into those 40, 50, 60, 70% losses. So if you're trading supply and demand, there are a bunch of videos all over the internet, okay, that explain it very, very thoroughly, but it is a very, very good reversal pattern. And it was clearly stated at that 423 level. The reason why I got that 423 level, you can look right over here, is as of the day before, which was that Wednesday, it was this bottom wick right there. There wasn't much the few previous days, and I wanted to get pure confirmation. We were already starting to come down pre-market and broke below this pre-market low. So I really didn't want to get, faked out of this first candle. Once that first candle came down, we confidently got in these plays, and it was just, like I said, pretty much straight down, all the way. However, guys, if we did get above this 430, 431 level, that would have been proven for more room to the upside. Okay. Now there is, like I said, when it comes to the reversal, trading, you can even look at today. Nvidia was a beautiful, beautiful play, and I really wanted to leave this chart open. All right, I don't have my EMAs or the VWAP or any indicators up as of right now, but this one was beautiful, and I was just a little bit off on this play. So I had this, okay, actually, which was eventually a demand zone on Thursday, but you can clearly see by looking at today, this would have been a perfect trade had it been on my list, and it wasn't. And the reason being is because you're looking to trade supply and demand. Once let the chart plays out, you don't have to take a position, okay, in the first 5, 10, 15, 20, even 30 minutes. Let the chart play out, okay, let some of that volatility and choppiness in the first half hour of trading kind of subside. And as you can clearly see, this 194 level would have been a perfect spot to take puts. And if you're sitting there thinking to yourself right away, well, oh yeah, Jeff, because that's right at the top. Well, no, it's look to the left. Okay, look to the left. Clearly on Wednesday, we did have right here, which was once resistance, okay, that we broke through, okay, and then over here, even one more to the left, you could see all of the zone right here sitting. So if we move a very, very quickly like we did, okay, these are the easiest reversals and the best reversals is not when they base and move slowly, when it's a rapid move in one direction. There always needs to be a pullback. Nothing can move in one direction, forever. Sometimes they can go even more, but nothing can move in one direction forever. And this would have been a perfect reversal zone. You could have picked up for $100. You could have picked up 190 puts. And I think they went all the way to about like 360. I mean, it's a 3.6, 360%, 260% trade off of that. Sorry, I can't do my math real quick, but it's a very, very, low risk, because if it just continues to move a little bit past your upside, okay, you're getting out of it, versus if you're trying to buy calls when it's already moving in a very, very violent direction, well, then you're holding on, hoping this support lasts and, holds. And then if it breaks below that, by the time it gets down here and you're like, oh crap, it broke support, let me get out of it, you're already down 50+% on your trade. Depending on how close you are going with options, if you go 3-4 weeks out, then, chances are you might not be. But if you're within a 5-day, expiration, area time frame contract, I should say, okay, then it's going to be down about 50% of that. So look to trade some of those reversals. One thing I've really been focusing on as of lately is to just try to take fewer trades, especially in this market. I watch some people who are very, very, very consistent, and they might not bring in, massive amounts of gains as much as some other people, or even sometimes as much as, as gains as I bring in. However, their consistency is key, and their losses are never more than their average wins. And that's something that you really, really want to focus on. And if you look, they really only take like 1 or 2 trades a day. They're very, very patient, and they look for that premium setup. So guys, that's it for this video. Go on YouTube, search supply and demand. It'll give you, a better understanding. Like I said, there are 4 things, criteria I look for. I have a breakout to the upside, a breakout to the downside. I have my supply zone to the upside where I'm going to consider puts, especially if, you can see some of that price action start to slow down. All right. And then I have my demand zone to the bottom where I'm going to consider calls. All right. And like I said, you only need a few tickers to look at. That's it for this video. I'll see you in the next one.